Good afternoon and welcome to NYFP. In midday trade on this Monday, the major U.S. stock averages are eking out a small gain. Joining me now is Peter Costa of Empire Executions. Peter, good afternoon. Thanks for joining me.
Oh, I love being here.
Well, on this Monday morning, we're seeing choppy trading for the equity averages. This does come on the heels of Friday's rally.
Yes.
And we can't forget we got that U.S. jobs report. So first and foremost, what did you make of that report? And what do you make of S&P upgrading the credit outlook for the U.S.?
All right, let's start with the jobs report. I was very much impressed by the jobs report, and I was expecting a better one. So when I saw it, I said, you know what? Even though a lot of people saying that there were a lot of things underneath it that may not have been that positive, it was a good, solid report. I do think we need a couple more of those to actually, that really another one more or two more of those, and the economy will look a lot better, for the Fed, for anybody else. And as far as U.S. upgrading, Standard & Poor's upgrading the U.S. debt, you got to expect it. The government has said, the federal government has said that there are going to be surpluses for the first quarter, the second quarter. So, yeah, of course, the debt rating, that doesn't surprise me. They went from a negative to a neutral, so it's still not AAA, and it's still not where everybody would want it to be. But it is, it's definitely a positive. They can they recognize that the government's at least making an effort to reduce the deficit and rebuild the economy.
And Peter, the big question is regarding the Federal Reserve. We saw the unemployment rate in the U.S. Tick up according to the May report, and we also saw the labor participation rate also tick higher. So what do you think it means for the Fed?
Well, the Fed's, looking at that, and this is my impression, and I could be 100% wrong, but I think if they see that in a continuing vein, they'll see that maybe this tapering won't be that bad a deal, because the economy is picking up. It's starting to build a little more momentum behind it, and maybe they don't need federal money to do it anymore. Maybe the U.S. economy has got enough money circulating that it can rebuild and start having some significant growth, not 1.5%, but 3.5%. So as long as they can see that in a continuing vein, I think that they're going to have no problem tapering off by by the end of the summer, possibly mid-September, October.
And speaking of the summer, we're into the month of June. Based on the jobs report and the latest economic data releases, have you changed your equity outlook for the summer?
No, I still think we're going to be in a sideways pattern. I think it's, I don't think that's a bad thing. I think there's going to be some trading opportunities for people that like to trade. I think that as far as, having risk on, I don't think there's a whole lot of risk going through this summer, and I think that once we get through the August, the dog days of August, and get into September, starting to get third quarter, third quarter earnings reports, I think you're going to start seeing a lifting market, another rising market, and we're going to end the year fairly strong. So I'm still on the same sideways, and then we go higher.
And last but not least, moving away from the U.S. equity markets and taking a look at global macro data as well as geopolitical worries, we're seeing a mixed global data releases, especially out from Asia and as well as the Eurozone. And it's interesting that Latvia this week could join the Eurozone as well. So given everything we're seeing around the world, what are you paying attention to? Actually,
you know what? I'm starting to pay more attention to the European market. And I'm not the only person that's saying this, but I do think that the European markets have bottomed, and I think they haven't bottomed. They're very close to it, and I do think that we'll probably see their bullish market or a bull market in European stocks probably start in September. I hate to be calling a time, but I do think you're going to start seeing a rising market probably as early as August, September, and I do think that they're going to be the place where a lot of people will start putting money. The only thing about that is if they put money there, they might take it out of here. So, we might have a balancing situation. But I do think that the European market has bottomed. The Chinese market, a lot of people, everyone's so concerned about 7% growth and I'm looking at them saying 7% growth, what we do for it here, So, let me tell you something, a country can expand on 7% growth pretty well.
And indeed, Peter, if we did have some of the growth here in the U.S. as we did in China, that would be good for the economy as well, for the markets. Yeah. Well, thank you so much for joining me on this Monday, and thanks for your insight.
Thank you.